You want an aggressive trade, but you also want protection. This is an overnight swing trade in which I used a SPY TBQ trade within a small account. I bought a call in the money and a put about 25% of the call price. My signal said up for the next morning, and the opening the next morning, it was up about 0.3%. Not a big move, but enough to make some money on the call. And then I followed the put down a little bit to add to my gains. This wasn't a huge win, but it's an excellent example of what you can do with your SPY T trade. Even when the market mood switches, I can still make money because I have both a call and a put. My call may have lost money if the market had gone down, but my put would have made money. And if it was a big move, I could have actually overcome the loss of the call. But if it goes down a lot, quite often it bounces back up, and you can follow that call back up into profitability. And these are the SPY TQ and the SPY TBQ trades, which are excellent for those of you who deep down really want to be directional traders, but still want that protection. When your indicator is on and you're on a roll because it's correct 60, 70, or 80% of the time, you're making money going directional. But once in a while, we get 2, 3, even 4 days in a row where it doesn't really work out in your favor. The mood of the market changes. So having that hedge allows you to minimize your losses and maximize your gains when everything is going right. Although you have a hedge, that does not mean you can ignore your position size rules. You still need to protect yourself because there are times when the market opens totally flat or volatility comes down. There's IV crushes that can hurt both your call and your put, even if your indicator is correct. So if you do what you're supposed to do and stay consistent and not try to fix bad trades or make up for losing days, just follow the plan. And over time, you'll increase the odds of success with your SPY T trade. The SPY T trade, well, it has 3 parts to it. And the first part is the time portion. It's an overnight swing trade. We buy at the close of the trading day and we generally sell in the morning. However, as you develop your skills, you may continue to trade into the morning or even into later in the day so you can minimize your losses and, of course, maximize your gain. The second part is the signal. Which direction are you pointing? Are you pointing up or down? And there are a number of ways you can do that. You can watch what the big guys are doing with option flows. You can look at the put to call ratio, maybe money flows, MACD. There are a number of ways to approach how you might consider the market might open the next day. We use the SPY Tomorrow signal, which is free at 4 o'clock Eastern Standard Time on the front page of spytomorrow.com. And it just simply says up or down. And that up or down generally correlates to how the market might open within the first half hour of the trading day. The third part is the ratio, and traditionally for SPY T trades, it's 2 to 1. But because this is a more aggressive trade, it's 3 to 1. So you would buy 3 calls to 1 put. Or in the case of the SPY TBQ trade, if your indicator said up, you would buy a call and then a put a quarter of the price. Obviously, the more accurate your signal is, hopefully better than 50, 55%, the faster your portfolio will grow. Now, I highly recommend that you test different signals out to find the right signal or combination of signals that's best for you. Test the SPY T trading signal over at SPY Tomorrow, but test other signals too, or maybe a combination of signals that gives you the most accurate, high probability of being correct in terms of which way the market's going to open the next day. Now, I have to tell you, the majority of the people who quit the SPY T strategies are generally not using the SPY T strategies. They notice that the signal is usually right. They get a little more confidence and they start going directional. Unfortunately, sometimes my signal and other signals hit roadblocks and you get a few days wrong in a row. And sometimes they try to make up for those trades by getting even more aggressive without a hedge. They just keep going directional all the way down to 0. Don't be that person. Figure out which is right for you. If you're going to go directional, that is fine, but make sure it's a very small directional trade. But if you use a SPY T trade, stick with the SPY T trade. SPY TA, SPY TQ, and SPY TB, which we've been talking about in this video, tend to work in less volatile markets. They also work in high volatility markets. Some of the other trades, like the SPY TS and the SPY TB, work in moderate and high volatility markets. It's important to know which trades work best in which markets. And if you want to test your skills, check out the 30-day SPY T challenge. And I'll see you in the next video.